Everyone, in this video, let's discuss about impairment, important concept. Okay, let's try to make some cutie videos in which we cover some important concept. The first one is gonna be indicators of impairment. Let's go into it. This can be around 10 to 15 minutes only. Okay, we just when are going somewhere, you can just watch it. An entity shall assess at the end of each reporting period when there is any indication that an asset may be impaired. If any such indication exists, the entity shall estimate the recoverable amount of the asset, irrespective of whether there is an indication of impairment. An entity shall also, so whether there is an indicator of impairment or not, the entity shall test an intangible asset with useful life or intangible asset not yet available for use for impairment annually by comparing the carrying amount with the recoverable amount. So when an intangible asset with indefinite useful life or intangible asset not available for use or impairment annually by comparing what and what carrying amount and its recoverable amount. Why? Because these two are there where no depreciation is going to be provided, right? There is amortization not there for these. Useful life is not there. I cannot provide amortization. And then again, this is not available for use, so I'm not going to provide amortization. That's why I'm going to test it for impairment. This impairment test may be performed at any time during the annual period, provided it is performed at the same time every year. Same time, if it is for October, every year, October, I have to perform this impairment test. However, different intangible assets may be tested for impairment at different times. However, if such an intangible test was annual period, the intangible test shall be tested for impairment before the end of the current period. If it is recognized for the first time in the current year also, then I have to test for impairment during the current annual period. Before the end of the current annual period, test goodwill acquired in a business combination for impairment in accordance with paragraphs. Okay, then the ability of an intangible asset to generate sufficient future economic benefits to recover its carrying amount is usually subject to greater uncertainty before the asset is available for use rather than available after use, right? Then, therefore, the standard requires an entity test for impairment at least annually. So, annually once at least have to do it. The carrying amount of the intangible asset that is not available for use. In assessing whether there is any indication that an asset may be impaired, an entity shall consider as a minimum the following indications. Okay, we have been bifurcated into external information and internal source of information. External source of information, there are observed indications that the asset's value have been declined during the period significantly more than that would be expected as a result of passage of time or normal use. For example, AL Limited share price has decreased so down. Okay, so, or in the market price of such asset has been decreased so down that a significant decrease is there. That is an observable indication. It could be an indicator of impairment. Changes with an adverse effect on the entity have taken place during the period or will take place in the near future in the technological, market, economic, or legal environment in which the entity operates or in the market to which the asset is dedicated. Market interest rate or other market rate of return on investment have increased during the period, and those increases are likely to affect the discount rates used in calculating the asset's value and use and decrease assets recoverable amount materially. There is a change in interest rate. That's why while calculating the recoverable value, I'm going to have a substantial impact due to the change in rates. Then there is an indication of impairment. The carrying amount of the net assets of the entity is more than its market capitalization. Carrying amount of the net assets is more than the market value. This is market capitalization. What are the internal sources of information? Let's repeat the Excel source once before we move on to the internal sources. Okay. There are observable indications that the asset's value has declined during the period significantly more than would be expected as a result of passage of time or normal use. Significant changes with an adverse effect on the entity have taken place during the period or will take place in the near future in the technological, market, economic, or legal environment in which the entity operates or in the market to which the asset is dedicated. Market interest rate or other market rates of return on investment have increased during the period, and those increases are likely to affect the discount rate used in the calculation of an asset's value in use and decrease the asset's recoverable amount materially. The carrying amount assets of the entity is more than its market capitalization. Now let's see what are the internal sources of information. Evidence is available for obsolescence or physical damage of asset. There is a physical damage or obsolescence of technology. So that's why there is an indication of impairment. Significant changes with an adverse effect on the entity have taken place during the period or expected to take place in the near future in that extent to which or in the manner in which the asset is used or expected to be used. These changes include asset can become idle because I have plans to buy new machinery, so this asset will become idle, or plans to discontinue, or plans to restructure the operation to which the asset belongs to. For example, a particular operation could be there, particular type of line of business could be there. I am going to discontinue the line of business. There is an indication of impairment for this particular asset now. Or plans to dispose of an asset before previously expected date and reassessing the useful life as finite rather than indefinite. So when it is finite useful life, I have to assess the impairment. Evidence is available from internal reporting that indicates the economic performance of an asset will be worse than expected. Generally, it produces 1,000 units. Okay, say for the last 1 month, it's producing only 100 units, good units, 100 good units. Then there is an indication that of impairment because there is a decline or worse economic performance from that asset. Now, dividend from a subsidiary, joint venture, or associate. For an investment in a subsidiary, joint venture, or associate, the investor recognizes a dividend from the investment, and evidence is available that the carrying amount of the investment in a separate financial statement exceeds the carrying amount in the consolidated financial statement of the investee's net assets, including the associated goodwill. Carrying amount in the separate financial statement with respect to the particular investment exceeds the carrying amount with respect to the net assets of the investee. There. Or dividend exceeds the total comprehensive income of the subsidiary, associate, joint venture in the period dividend is declared. Dividend is going to exceed the other total comprehensive income. Total comprehensive income will include the other comprehensive income, right? Plus the we have $. So that dividend exceeds the total comprehensive income of subsidiary, joint venture, associate, because it is going to pay from its reserves, right? That's why there is an indication that there is going to be impaired. It is not exhaustive. An entity may identify other indications that an asset may be impaired, and these would also require the entity to determine the asset's recoverable amount and, in the case of a goodwill, perform an impairment test in accordance with paragraphs. Now, evidence from internal reporting that indicates the asset may be impaired includes the existence of what are the cases, evidences could be there. Cash flows from acquiring the asset or subsequent cash needs for operating and maintaining us are significantly higher budgeted. I have budgeted some expenses. Now the cash outflows are going to be higher. So there is an indicator of impairment. Actual net from that asset are significantly worse than those budgeted. Inflows are less than what I expected. So there is an indicator of impairment. Significant decline in budgeted net cash flows or operating profit, or significant increase in budget loss. See, if there is a increase in cash outflow, there will be an increase in cash loss. Then, increase in budgeted loss also. Cash loss with respect to budgeted loss. Whenever there is a decrease in revenue, there will be a decrease in operating profit. Operating cash flows for the asset when the current period amounts aggregated with the budgeted amount for future. Whenever I am aggregating all the cash flows and losses, either for the current year or I am going to aggregate with the future also. Indefinite useful life to be tested annually. Apart from when the requirements apply, the concept of materiality applies in identifying whether the recoverable amount need to be estimated. For example, if previous calculations show the asset recoverable value significantly greater than the carrying amount, the entity need not re-estimate the asset's recoverable value if no events have occurred that would eliminate that difference. Similarly, previous analysis may show the asset's recoverable amount is not sensitive to one of the indications listed in paragraph 12. As an illustration, if the market rates, interest rate or other market rates of return on investment have increased during the period, the entity is not required to make a formal estimate of its recoverable amount in the following cases. When it's not required to make the estimate of recoverable amount, like if the discount reduced in the calculation of assets values, you is unlikely to be affected by the increase in market rates. For example, the short-term market rates could have been increased, but long-term is remaining stable. Then I need not reassess the recoverable value. If the discount reduced in calculating the assets value is likely to be affected by the investee increase, but the previous sensitivity analysis of the recoverable amount shows that it is unlikely that there will be a material decrease in the recoverable amount because future cash flows are likely to increase. See, even though there is an increase in market rate, I done the sensitivity analysis of the recoverable amount previous, and it shows that there, even though there is a material decrease or in the market rates, the probability that the the recoverable amount will decrease is very less, because I expect that the cash inflows will increase, thereby offsetting this increase in interest rate impact. The decrease in recoverable amount is unlikely to result in a material impairment loss. There will not be a material impairment loss. That's why I'm not going to re-estimate it. If there is an indication that the asset may be impaired, this may indicate the remaining useful life, the depreciation, or the residual value needs to be reviewed and adjusted in accordance with the standard applicable to the asset, even if no impairment loss is recognized for the asset. If there is an indication for impairment, I have to check, I have to review the useful life, the depreciation method, and the residual values I'm allocating, whether it is proper. I have to check those. Even though I'm not going to recognize any impairment loss, I have to check these. Okay. This is with respect to the indicators of impairment. Okay. If you really find it useful, please do like, share, and subscribe. Also, stay tuned for the next videos. Thank you.